Liberty Holdings, insurance and wealth management group established by Donald Gordon in the 1960s, one of South Africa's most colourful businessmen. It's controlled today by Standard Bank and has been for quite some decades. Its main activities, of course, are in life insurance, but it also has the associated investment management and retirement products and all of that stuff. It owns the whole of StanLib, its asset management unit. Market cap there is 34.7 billion rand, price to earnings ratio of 8.6, rather low, dividend yield of 3.7%. Levon, this one had a bit of a checkered time in the middle there, because you'll remember they decided when Bruce Hempel came in that they were worried about their equity risk. They put in place a complicated hedge almost at the worst possible time. The market started to rally, so that delayed their recovery. But I do notice, like most of these companies, they've started to benefit from this rising equity markets. Their persistency rates has stabilized. They began to get some traction in the marketplace. They stopped losing market share. Their repeat business was kind of coming back. So the ship seems to have been steadied, and even in the last couple of months, it's rallied to around 120 Rand. Anything extra to add on Liberty? Also seems to be doing fine.
It's had a stellar performance for holders that have been there for the last few decades. It's had strong exposure to South African and UK property. It has had a very incestuous relationship in the bank assurance side of it. Very strong asset management businesses, very shrewd money managers. So yes, there's been a bit of a U-shape, but I think the cycle's starting to turn. And as you've correctly mentioned, they've had some hedge issues in the past, but that's something behind them. So a very bullish outlook for Liberty, and one that's likely to track a buoyant market.
But as you point out, it's relatively rare these days for that bank assurance model to still be spoken of. Mostly it failed, so banks and insurance companies went their separate ways. But in this case, here we have a bank which operates and owns this company, but doesn't really sit in it too much. I mean, in outline, Liberty is really its own operator, and Standard Bank is relatively happy to keep its chaps on the board and to extract its dividends and all of that. So it's kind of on its own 2 feet. It owns its own asset management. It's all good. I mean, there's no reason why it shouldn't continue to prosper. The fact that Standard Bank owns it is perhaps neither here nor there for people buying this share, right?
I think that the relationship had been useful, and there's going to continue to be a lot of synergies. The model in the 90s had been one of a very close fit. More recently, they're trying to keep their businesses as separate as they can. Let's also remember that a lot of US legislation has come in to try and fragment financial services businesses.
Yes.
So these bank assurance giants are mindful of that, and they try to keep their books as separate as they can.
Honest. Okay, good. And so at this price, hot, not, yes, no?
I'm quite hot on this. I like the stock.
You're keen on the whole sector. I'm going to stick with not hot for the moment.